is a major factor. At ito po, ang hatid nito, syempre, higher. Many people have thought, after the COVID pandemic, we have new problems with the war, commodity prices have been increasing, inflation, and now, as Miguel said, fears of inflation. But as we look into that presentation of Miguel, if you notice it, if you're really very observant, we're now beginning to see what we call silver tints. Behind dark clouds, you now see silver tints, which probably wouldn't be as visible in 2020 and 2021. But that's not what this whole timing is all about. I'd like us to focus on this, it's really the bear months. And I'd like to say that, over and above looking forward to the songs of Jose Marichan, all of you have channeled your efforts to be part of our forum, looking at maybe financial wellness and responsibility within this next 4 months of bear. I would say this. The bear months usher in a very different time in the Philippine environmental setting. I think you'll all agree with me. During the bear months, we're going to be more festive, we're going to be more cheerful, we're going to be happier. And the inclination would really be to enjoy particular experiences and to channel very positive feelings of, again, joy and cheerfulness. But you see, there is such a thing as responsibility for the future. As we define financial wellness, it is security and the freedom of choice, not just today, but in the future. I think the call being made by Rampver Financials to all of you is to probably tweak a bit of our attitude towards our bear months and shifting it a little bit from enjoyment and happiness. I'm not saying totally eliminate that. That is us. We are Filipinos. But in a way, shift a little bit of that for our happiness and enjoyment for the future. So again, it's not just wellness today. It's wellness and happiness for the future. Because we're going to be getting Christmas bonuses. We're going to be getting a little more than expected, our 13th month. When you put that all together and you practically spend everything, then we're back to the grind for another year in January, hoping that we create resolutions to becoming more financially responsible and accountable. Never happens. It never happens. You don't have to wait for a new year to come up with money resolutions. The best money resolutions should happen in the bear months because your wherewithal to get into investment positions are always going to be best during the bear months. And Miguel has touched on all of these. A pandemic simmering down, high levels of inflation, interest rate hikes, which continues. And I guess that's a real problem why the market started plummeting again. And lastly, because we're not at par with the increases that the Fed has made, we're now seeing a further weakening of the peso. This morning, we were looking at 56.60 to 56.65. After correcting to below 56, we're back to the high, mid 56, and maybe if we're not going to follow suit, we might even be seeing a 57 to a 57.50. We are investors. We know what we're up against. And we also know attitudinally and behaviorally, hey, it's a great opportunity. As those silver tints show up, it might be the time to invest. And Warren Buffett said this, be fearful when others are greedy and be greedy when others are fearful. Actually, we all know this, easier said than done. When everyone's fearful, you become fearful. And when everyone's greedy, it's so easy to get greedy as well. The roller coaster of emotions in investments, stock market trading is real. Normally, we lace it with our own storylines, market's going up, I want to be part of it, it's great, I come in, I buy. It goes further up, you see, I made the right decision. It starts going down. Oh, this is an opportunity, I'll buy more. Then it goes down further. And as it goes down further, little by little, things chip into your level of confidence to the point that you're going to be pushed towards capitulation and despondency. Ayaw ko na to, I'm out. This is such a mistake. And when you do that, markets climb a bit and you're going to say, that will go down again. And true enough, it goes down again. But when it goes up, there comes a time when it continuously goes up. By that time, we're now again scared of getting left behind. So we again join the bandwagon as the level of market confidence becomes positive. Why is that happening? We all know what to do, we don't do it. It's because of one main thing. It is commitment. We have to be able to commit to our investments, to do the right things, because whatever is in that environment, they will shake you. They will make you rethink your position. And I've said this many times, we're now living in what we call a VUCA world. It's a VUCA world. And quite frankly, management and optimization of investments have become more difficult and challenging because things would have been more volatile. There are rapid, unexpected changes all the time. The black swans that we know, they don't seem black anymore. They just happen one after the other. There is such a thing as uncertainty. We know that there are unknowns, but that has been stretched to ambiguity. This is tougher because in ambiguity, we don't even know what we don't know. And they impact markets, they impact investment performance, and before we can respond, things can be too late. And obviously, things are becoming more complex. There are key decision factors. There was a time when we only have a few variables. Today, there are multiple variables to consider. I go back to my book in Economics 101. In Economics 101, certainly, once you say the interest rate goes up, equities go down. Miguel would have said that. That's a typical rule. However, other factors like economic movements and fundamentals like recession, interest rates, exchange rates, that kind of complicates matters because we cannot be an independent market anymore. We're now part of a region. And on top of that, that region is part of the world. That brings in several new considerations that makes it more complex. And I agree, our market will not fly without foreign investors. But foreign investors have other options. They can go elsewhere. And they can have a whole sift through of other markets before they come back to us. Because they're seeing probably greater amounts of optimization in other markets. So as we see this, do we become, frustrated, disappointed, and should we shun the market in full? Just avoid it? The answer is no. The answer is no. We will have to match up volatility with vision. What's your vision for your investment portfolio? What are you doing this for? What are your goals? No matter how volatile markets are, we want to realize goals. We want to have a luxurious retirement. We like to educate our children better. Your vision will tide you through the volatility of markets. On top of uncertainty, you have to have understanding. And that's the reason why you attend forums like this. Can you just imagine how many investors or budding investors are there who are not even attending sessions like this? While it's given for free and you have access to the likes of Jenna and Miguel just like that? How come they're not here? Because they're not understanding markets. They are acting without appreciating. With ambiguity, we match up with agility. We have to have the flexibility to move. And that's the reason why in Rampver, we give you several options. There are waves and waves of openness towards real asset allocation, involving markets, involving different investment vehicles, and even horizons are differentiated. And lastly, and obviously with complexity, we'd like to match up with clarity. We will have to do all of these things because the challenges, as I've mentioned, would be all around us. There are a lot of complications. There is a volatility of both local and global markets. But let me tell you, the bigger problem is this. It's attitude, culture, and behavior. Because no matter what's happening outside, if you manage yourself better, you will always do well. I have yet to fathom and understand why people try to manage economies. That's the job of politicians and economic managers. You're not supposed to dabble into the economy. Your economy should not be the same as the Philippine economy. For your own sake, for the sake of your loved ones and the fulfillment of your goals, your economy will have to be a different economy, which means you have to maneuver whatever is happening to be able to fulfill your financial dreams. Your behavior is more important. Why? Because you have to manage the controllable. And what is controllable? Yourself. You cannot manage something you cannot control. And once we see that we're dabbling into things that we cannot control, like the economy, it becomes a futile, disappointing, and frustrating exercise. So clearly, we have to be able to do that. So what are the must-dos in times of uncertainty? We have to understand the situation. That's why Rampver is coming up with sessions like these to make us understand and appreciate what's happening. To make us realize that, hey, if this factor input behaves this way, then the market can go that way. We can expect certain movements to happen, and we can reasonably and in a more educated way predict how markets are going to move. Analyze before reacting. How many people would have sold because the bandwagon is selling? Because people are selling, they sell. Because people are buying, they buy. Because people are buying this, they buy the same thing. You have to analyze before reacting. And mind you, there are times when reacting before analyzing can be fatal for investing. Be mindful of perspectives. Think about your goals. Because your goals are finite. Your child's going to study in X number of years. You are going to retire in X number of years. You're not supposed to make that elective. Can you imagine how bad it can be when you plan to retire at 60 or 65? And when that time comes, you don't have the capability to do so? How tough is that going to be? That you have to extend your working life doing something that you might not like doing? It's even good if you like what you're doing. But what if you don't? There is a big difference between an emancipated person where cash flows are finite and fixed no matter what's happening. So they actually don't need a job. They have an emancipation fund, or for the like of the real people there who don't mind, it's actually FU money. You can walk away from doing something you don't like doing because you have money and cash flow coming in. How are you prepared for that time? And when that time comes, the age target that you have, will you really be emancipated? You have to plan for that. Today's life cycle has extended. There was a time when people say, we live to 75. Today, the expectation is 90 to 100. Our generation. The younger generation can even be higher than that. People like Tony Robbins would now be talking about 120, 130. If you start working 21 and you end up working or stopping that workflow by age 60, you should have enough money to live another 30 to 40 years without working. Are you ready for that? Did you have the financial accountability to be ready for that? Your money has to work for you, or else you will work until the day you die. That is the issue here. And on top of that, you might get to work at a time when you don't have to, because you have to. So think about it. Stay the course no matter what's happening to your investments. Sometimes longer term strategies take time to be effective. And that's why I like Jana's charts. She showed how long it has been from the 90s to today, how their funds have performed. Because people are looking at the last 2 to 3 years. Investments are not graded and measured in terms of performance in 3 to 5 years. That's not the horizon. You really want to be focused on the way this works. You have to accept that you have to look at the long haul. This is a long game. This is not going to be a short game. So clearly, by knowing what you should do, where you're headed, you will behave correctly. So move to execute correctly. Because there are so many alternatives out there. But again, you all know, Rampver will not put questionable fund managers in a forum for you. We only invite the best of the best. And that's the reason why we're here. Hindi kami mapapahiya sa mga fund managers na ito. And why? Because we've been part of that. Sometimes the real risk is missing opportunities. And that's the reason why I introduce this here. For the bear months, can we start our move towards a simplistic strategy called peso cost averaging? Peso cost averaging is a strategy. It is investing a fixed amount in a pre-selected investment instrument in regular periods or intervals. Very important, 3 items. Fixed amount, pre-selected investment vehicle, periodic terms or periods. Alam nyo, this is the way to go. And we know it works, especially for Philequity. I have shared this many times. We have a client, a bus driver who became a millionaire, investing 1,000 a month. At best, 2,000 to 3,000 during December, when they earn a little bit higher. With minimums that are like that now, there is no excuse not to be an investor. But this bus driver started in the 90s. Do you know Philequity's NAVPS in the 90s? It was 1 to 3 pesos. The market is down today and it is 30 pesos. When can you earn that? What bank will give you that kind of return? 1 peso to 2 pesos, nagiging 30 pesos. So the 1,000 a month, the 3,000 every December, ended up making him a millionaire before the pandemic. So hindi po haka-haka ito. Nangyari na eh. Meron ng showcase eh. Right? And let me tell you why it works, why this works, and why we're recommending it all to you using Philequity's funds. Or it cannot be even one fund. If you have a little more money, we can cut it across 2 to 3 funds that Jana presented. Why does it work? Number 1, easy execution. You don't need to study the market. You need to study yourself. Magkano perang kaya mo? Ilan beses sa isang buwan ka maglalagay? Quincenas ba? Or every end of the month? Because the analysis, the depth of study, markets, that's Miguel's purview. Trabaho nila Miguel yan. Give them the job. Let them do the work. Why will you have to do that? I mean, look at the charts that Miguel showed us, Jenna showed us, in a span of about, what, less than an hour. Tingnan nyo yung mga graph na yun ba yung gusto nyong gawin? Or do you want to do what you do best and just give them the money so that they can grow it over time? Easy execution. You don't manage economies, you manage yourself. Second, and very important, it sets forth discipline. Natatanggal mo sa kinikita mo yung pang savings and investments. Immediately, you don't hold it, you don't touch it, it will grow for you. Discipline is always an anchor in successful investing. Number 3, money is deployed and optimally works for you. Diretso eh. After you receive it, you give it to the investment manager, to the fund manager. Deployed agad. Why? What happens when we don't deploy? O ipapark mo muna. Paakyat yung market, park muna natin. Bangko muna. Microscopic interest. Then yung market, umakyat na lalo. Hindi mo na mailagay. Yung parking niya, naging long-term parking na. And because of inflation, you get erosion of value. When it's immediately invested in periodic amounts of time, the deployment of your money is optimized. Your money will work for you. Money is the best employee. Works 24 hours a day without complaining. That's very important. And lastly, pero ito yung pinakatuktok ha, ito yung talagang pinaka-importanting factor. Why peso cost averaging works, especially for Filipino investors. You take emotions out of it. We are very emotional people. And in our investments, it really does get in the way. I tell a lot of people, the human organ that's most important in investing is not the heart, it's not the brain, it's the tummy. Patigasan po ng sikmura dito. So kung emotional ka, maiiwan ka. So peso cost averaging takes out the impact of emotions because you're just putting it in a methodical way, in an organized way. I want to end with this slide. And it's a statement made by, again, who else but Warren Buffett. Maybe one of the least popular lines that he says, but as far as I'm concerned, one of the most important ones. Cash combined with courage at the time of crisis is priceless. If you're able to set aside the money, please naman po, yung ating Christmas bonus, let us make it work for us. Karamihan kasi, September, October pa lang, ubos na yung Christmas bonus eh. Nautang na. Diba? So let us make sure we have the cash and we have the courage. Kasi yung iba naman, may cash din, pero mahina ang loob. Hindi alam kung paano i-deploy and they don't know how to make money work for them. And when that happens, there would be a least functional way for the money to earn and grow. So please, the bear months usher times of cheer and joy. Let us make sure that that happiness doesn't stay for 4 months. That happiness should be long-term. And when you're looking forward to long-term happiness, fleeting factors of blips of interest rates, of performance, they won't matter. Alam niyo po, investment instruments come and go. But organizations like Philequity and hopefully Rampver would be there by your side to make it happen for you. Because we're not all about instruments and investment vehicles. It's a bunch of people with a real mission to do the best for you, to do the best for your money, and to make sure you're fulfilling your financial dreams. Thank you so much, and good afternoon once again.
Thank you very much, Boss Rex. Amazing talk as always, and I'm continue learning every time you have this session with us. So friends, don't let this opportunity pass. As Boss Rex would always say, education without execution is just entertainment. And now we have reached one of the most exciting parts of the event, the Q&A portion. So at this point, may we request our guest speakers to please open your videos as we now move on to our question and answer portion. And as mentioned earlier, we have chosen the most interesting questions in our chat box. So this will all be answered live by our speakers. So to start our Q&A session, this question is for Miguel. So the question is, do you agree with the reports that we already reached the peak of our inflation? And how does it compare with other neighboring countries?
Okay, good afternoon, everyone. I think our inflation has very likely peaked. If not in July, it'll be in August. It depends per country. So, for example, you can imagine the Asian countries probably have inflation are about the same situation as us in terms of trend. But if you look at, say, the US and Europe, it's a different matter there. Europe's in a particularly bad place. I don't actually know when inflation peaks there. Like UK probably hit 20% this year. I told you that anecdote in my presentation. Electricity bill ng kaibigan ko, 6 times ng electricity bill sa Pilipinas. 6 times! I know how bad that is. It is legit. I mean, I chatted him. It's that bad. So yeah, we're probably par with our Asian peers, but worse off than those who make their own commodities. But we're better off than US and Europe by a wide margin.
Okay. And additional to that, no, this is actually from the same person. So, with the current conflicts with the Taiwan and China, Russia and Ukraine, so do you see any direct effects on our supply chain, import and then export?
Well, there was initially, and I think markets have adjusted to us. Europe again is a different matter, but the Philippines has largely adjusted to Russia and Ukraine. There are still some bottlenecks here and there, but their adjustments have been made. It's a bit more expensive to import though. Taiwan and China in its current state, I don't see a problem. If it actually becomes a real war and not just a Cold War or posturing, I mean, yeah, I don't know, man. But let's hope not.
Thank you for that, Miguel. And then for next question, this one naman is for Jenna. So the question is, since we're talking about like both local and the global funds, so do you have any plans for a multi-asset or feeder or foreign funds under PEMI moving forward?
Okay, thank you for that question. So to be honest, as of current, we don't have it yet in our pipeline. But with that naman, we will announce it already in our website once we have it already. And we will closely coordinate with Rampver to tell all our clients. Thank you.
Thank you, Jenna. And then additional, no, since a lot of clients are already interested to invest in PEMI, so how can PEMI help our current clients and investors in ease of doing business? No? So do you have any plans in shifting from the traditional process that we have to digital later on? Or to like online process later on? Yeah.
Okay, thank you, Kim, for that, and thank you for that question. So first of all, we understand the sentiments of our clients with regards to ease of investment, most especially during the times of pandemic. So first of all, for all our existing clients, what we encourage is for you to update your account, because we do have this online facility or e-facility wherein you can just send your forms through email plus the proof of deposit. But aside from that, we also have the auto-deduct facility. So our partnered banks is under BDO and BPI, wherein it's just a one-time form. So there's a PEMI form and also a bank form that you need to accomplish. Then every month, you can just select if it's every 1st or 16th of a month. It will be automatically deducted to your account. So we can also apply Sir Rex recommendation about the peso cost averaging, which we highly encourage that you do that. So you can do that on a monthly basis or quarterly basis on a long-term investment. Thank you.
Thank you for that, Jenna.
Kim,
Yes,
I'd
Paul.
also like to mention, might be worth mentioning it now. We're going to be launching publicly Rampver online soon, and one of the highlighted fund managers would be Philequity. So we can make people invest seamlessly, simpler in terms of documentary requirements. So I guess people should look forward to that. That's going to be coming up soon.
Thank you. Thank you for that, Boss Rex. And for sure, our clients are looking forward to this Rampver online. And actually, the next question, Boss, this one's for you. So since a lot of people are more or less no maraming pera during bear months. So with this question, is our country, Philippines, still considered as a sweet spot in investment destination in the region?
I guess that's going to be debatable. A lot of foreign fund managers are not seeing that, so they're looking at other countries ahead of us. But if you're going to be particularly focusing on our own Taipans, no? Because again, I always mention I'd rather not fight the big boys but join the big boys. And as you see Miguel's presentation on the families, the big families in the country, buying their own companies, buying their own stocks, why don't we join them? I'm so sure they know better than us, right? In terms of the way they're performing, in terms of the way they're valuing themselves. So they know they're practically undervalued. So it might be a good chance for them to pick up their own shares at a deep discount. So we also should be able to follow suit. Now, the foreign fund managers, let me be clear about this. They have options kasi. I mean, we're not the only game in town. There are other places to go to. So think about it as a cycle. So syempre unahin nila where the optimism abounds, but eventually they will see us. We might not be top of the list today, but it can happen sometime soon.
Thank you. Thank you for that, Boss Rex. And since we're talking about our fund managers, I think this question best fit to Miguel. So the question is, So what do you think are the best investment strategies now that we have officially entered the bear months? So are we seeing a Santa Claus rally till the end of 2022?
Okay, generally there is a Santa Claus rally, not all the time, but I'll give you guys a bonus. I have not shown this in public, Excel pa to. Rex Mendoza might want to see this also. Okay. I don't include this in presentations except the board meeting namin, but I'll show you to answer your question. Okay, yeah. New picture to. This is the Excel. So here we actually have mathematical stuff on seasonality, ghost month, January effect, Santa Claus, and all that. So we know what's real and what's not. So I'll just show you the answer here. The best time to buy the market, when we looked at data since EDSA revolution, is actually Halloween to Valentine's. The average return on a full year for the Philippines is 12%. Halloween to Valentine's, the average return is 9%. In other words, 3/4 of the market's annual return just happens in 3.5 months. Yan, hindi ko siyasama sa
Guys, this is such a bonus. This is what I like about Miguel and Philequity. They hindi haka-haka, they're always supported by data. And whenever they make certain statements, they back it up. I think that's what I like about you guys. I mean, and it's not emotional. There are numbers that they show, right?
That's our trade secret. That's why we don't show that. But I think Rex Mendoza and you guys might find it interesting. That's the first time I've shown that, I think, I don't know, in 6-7 years. Because when I joined Mr. C, we worked on this for 2 years, 3 years. So we checked everything. So I did it myself, and my assistant, very good at math, we did it. We checked all the myths in the market, and we realized that that no one was looking at this particular period. Puro ghost month, Santa Claus rally, January effect. This one walang tumingin nito eh. So yeah, just want to show. And we update it every year, right? Just to see if it works. And so far, it's still working. For example, if you look at the 2021 cycle, the full year was down 0.2. Halloween to Valentine's was up 1.8. If you look at the COVID year, Market was down 8.6. Halloween to Valentine's +9.
Thank you for that. Great bonus, Miguel. So I think for those people no nakakaintindi ng mga numbers na ganyan, like they really appreciate that. So, and again, thank you so much, Miguel. So now we jump to the next question. This one naman is for Jenna. So, given with the uncertainties no and volatility nga ng market natin in the last few years, and then of course on the next months no, in the next coming months, so would it be best to stick to index fund or ETF instead of funds like Philequity Fund or Dividend Yield Fund or Alpha? So again, no, would it be best to stick to index fund or ETFs instead of funds like Philequity Fund, Dividend, or Alpha?
Okay,
So,
thank you.
okay.
Yeah, go ahead, Kim.
Okay.
All right. Thank you again for that question. So the presentation that I had earlier is actually our top 3 funds. So in suggestion as well for our clients, but this will always depend on your risk tolerance. So this is more of the aggressive type. So what we are recommending is the Dividend Yield Fund, the Philequity Alpha One, or the Philequity Fund. So if you want to have something defensive and resilient during the when the market is down, you can go Dividend Yield Fund. But if you're more of the aggressive type, then we will suggest the Philequity Alpha One Fund. But if you want to be somewhere in between the two, then that will be Philequity Fund.
Yeah.
Thank you.
So thank you very much, Jenna. So I think that answers the question as well no, of one of our client na kung meron daw ba plan magbigay ng fund which is moderate type of plans naman or moderate type of fund. So I think yeah, so for our client that ask that question, so you can choose Philequity Fund. No? And again, thank you very much, Jenna. Yeah. So again, for next question, this one naman is for Boss Rex. So the question is, Philippine peso sank to a near 18-year low against the dollar yesterday to 56.42. Is this alarming at all or a must to boost for exports?
You really like alarming? Do you know how it closed today? It closed at 56.77. So again, that's another jump, right? And as I've said, it's also because of the dynamics between the Fed and the BSP. And Miguel is right. I mean, we're not like the Fed. They're already teetering towards recession. They already had a quarter that's negative, right? The good thing for us is that we don't have that. We're still posting an 8. So if you're going to be looking at the risks for a recession, it's going to be farther down the road for us at the very least. So we're not going to be as defensive against inflation as they are. Why? Because again, think about it. This is a new administration. You don't want to put a clamp towards growth because that's going to be a political issue. You'd like people to feel good that they elected you as a president. So you don't, in fact, you should be spending more so that people feel the growth. So I would see government spending to be pushing the GDP much, much better than it did in the past, especially in the time when we're like not borrowing as much and stuff like that. So I guess clearly for me, I agree with what's happening. I agree with the economic managers for as long as it's under control, not wayward. But again, I'd like to take this opportunity to answer the questions for Jenna. Jenna, sorry, pero talagang I really like to do this. No, I'm not fond of index funds. Okay, I know many of our viewers read books and go through YouTube channels of foreign investment gurus or foreign investment advisors. If we're in New York, I will agree with you. Index funds are good because not a lot of fund managers beat the index. They have a very, very efficient market. The Philippines is not an efficient market. You have less than 300 actively listed stocks. So the big boys can do more of their magic because the market's not efficient. If you look at sa akin, the answer I'll have to that, Jenna, pakita ko lang yung chart ng Philequity Fund eh. Nasaan yung index, nasaan yung Philequity Fund? That difference is value. You lose that value by investing in an index fund. Right? So I'd rather invest, kasi ako pa, I don't invest in financial instruments. I invest in the people behind them.
Mhm.
So when I invest in the index, there's no person behind it. It's a computation of the basket. If I go to Philequity, I have Wilson C. I have Miguel Agarao. I am betting on people handling the money for me. So how can you go wrong with that? Yes, I pay fees. But look at the difference. They cover for the fees they charge. And I'd rather do that while sitting pretty, making them grow my money. That is the way to do this, right? Second question. Sorry, yung moderate fund. You don't need to launch a balanced fund. You know what you need to do? If you need a balanced exposure, meron ding bond fund si Philequity. So kuha ka ng 50% ng bond fund niya and then kuha ka ng 50%. May balanced fund ka na. Right? So you don't even have to have a balanced fund to have a balanced portfolio. Any investor can balance that portfolio with a combination of two funds. Thank you.
Thank you. Thank you for that, Boss Rex. I agree, no, na if you can choose both, you can invest in both, you can have bond fund and an equity fund. And given for those people who are in a way conservative enough na hindi nila alam which fund really to choose in investing. So we have this question. This one is for Jenna again. So what are the advantages in Philequity funds over the Pag-ibig MP2? So will the fund work on short positions if PSE will eventually approve it?
Okay, thank you again for that question. So, like what Mr. Rex said a while ago, for mutual fund, this is not a short-term type of investment. This is really for a long-term investment. So, we don't recommend that you compare it on a short-term basis, but you can see that Philequity Fund, it's over 28 years already. So, that's our flagship. So, yung return niya will give you around 12% per annum. So that's an average per year already. So you can compare that as well with other instrument. If it gives you around that much, if it will give you around 12 to 13% per annum. So still, I would recommend if you're looking for somewhere that you want it not too aggressive or not too defensive, you can go for Philequity Fund. Thank you.
Thank you. Thank you very much, Jenna. And down to our last three questions. So this one is for Sir Miguel. So I have been investing in Philequity for several years now. So do you have any plans to have an app so that I can monitor my investment easier? Actually, this one's for Jenna pala. So do you have any plans to have an app so that I can monitor my investments easier?
Okay, thank you again for that question. What we have on our pipeline will be an online portal, but we will further discuss this with Rampver and we'll surely announce it on our website as well. Thank you.
Thank you very much, Jenna. So mga wala pa pong funds kay Philequity, kay Rampver online. But for those who are invested already in Philequity, like we can really surely wait for that online portal. And again, thank you very much, Jenna, for giving excitement to all our existing Philequity clients. So ito naman, Boss Rex, this one's actually for you. So it's not more on a question, but it's like a statement. And we want to get something like from you, your take from this one. So sabi niya, the post-pandemic seems to reflect what you are saying about the culture and attitude of many Filipinos today on investment. Kailan kaya tayo matututo na hindi tayo masyado umaasa sa gobyerno?
You know, we have to realize that that's already a reality for many of us, no? Many Filipinos who don't rely on government actually do a lot better because government can help, but it is not going to really work if you're too dependent on government. In fact, it's going to be very disappointing, right? And then you're just going to be looking at other countries, checking out other opportunities, and before you know it, you know, there is going to be some frustration, disappointment, and learned helplessness. Real thrust towards prosperity and abundance is accountability. You know, the buck stops with you. You have to do something about it. The government If it helps, fine. But you're not supposed to be dependent on it because, your loved ones are going to be looking up to you to be the one to provide. You cannot pass on that accountability to someone else. Thank you.
Thank you. Thank you very much for that, Boss Rex. And last two questions, this one for Miguel. Do you have any Philequity fund that's like an ETF naman daw?
Well, ETFs are essentially like passive funds. That would be the index fund, which Rex Mendoza hates. But it's not tradable like an ETF. It's like an ETF kasi can buy and sell it like a stock. So we don't have that. But an index fund in terms of return profile would be the same.
Okay, and then additional niya, what is the difference between Philequity fund versus Fm Etf naman daw?
Fm Etf is a passive fund. It's like an index fund. So it just copies the index. You can like trade it like a stock.
Mm-hmm.
So that was like First Metro's pet project before. Tas walang sumunod eh. So yeah. I won't say why, but yeah.
Okay. For last question for Miguel. So, what are the drivers that you are thinking that would drive the market for the last 3 months, or for the rest of 2022?
That's tough because I'll be honest with you. When I was talking with Mr. C, okay na yung market eh. But Powell's speech last Friday really makes everyone reassess their economic outlook and market outlook. So outside of season, and what we have going for us is a peak in inflation and good seasonality. But again, on the seasonality, these are statistics. These have no reasons behind them, and they're not 100% foolproof. So if you have something like the peso suddenly weakening a lot, that's gonna be like the 20% chance that statistic fails. So I see a better second half 2023 actually. It's like what we thought would be good got moved a bit. So the good news there is your window of buying increases. It's now a longer duration. And you may be able to get stuff at cheaper prices.
Thank you. Thank you for that. And last question for Jenna. Okay. So, okay, here. So, is it okay daw ba to invest into, or is it recommendable to invest into different type of plans? So, parang yung plan niya, meron siyang different goal, and bawat goal na yon meron corresponding fund. Is it okay daw ba na ganon, or better to stick to a specific fund na lang and focus on that?
Okay, thank you again for that question. So also I want to add lang doon sa sinabi ni Sir Rex. Because Philequity, we don't have a balance fund. But if you want to have a balance fund, you can actually combine. And yes, you can do that. You can combine different Philequity funds depending on your goal. Like just to share, for me, I do have different funds as well in Philequity because I do have different goals for each as well. So my recommendation, yes, you can combine. If you're looking for a balanced type, then if your risk profile is also a balanced type of investor, you can divide that as well. You can open a peso, then you can bond fund, and you can open an equity fund. But if you want more of the aggressive type of investment, then you can combine the top three that I discussed. So again, that's dividend yield, the Philequity alpha, and also the Philequity fund. Thank you.
Thank you. Thank you for that, Jenna. Last question. This one's for Boss Rex. So any advice if I have a substantial investable funds now, invest by lump sum or still wait and see a clear path to recovery first?
I wouldn't really bet big at this time. I'd rather spread it out, and for good reason. As Miguel mentioned, there are still certain things that are, somehow tilting the balance as to market direction. I'm sure this impact on the exchange rate will be felt in the market by tomorrow and the week ahead, right? Because certainly there would be companies that would have dollar loans. There are also companies that don't exactly earn dollar revenues but have dollar expenses. So there would be an impact for those things. But I guess the important thing is this, that the attitude shouldn't be one time, big time. So it's really a function of asset allocation. I have to have emergency funds. I have to have some fixed placements so that when something wrong happens, I don't need to sell my portfolio. I can continue growing my portfolio and buying at bargains. So I guess that's the answer that I'll have. I'll put substantially if I have a big amount, but I have to make sure that I can still continue that discipline moving forward. It's not a one-time thing.
Thank you. Thank you for that, Boss Rex. And so before we close our program, may we please get some final words or any message again from Boss Rex, Miguel, and Jenna? I think Jenna can go first, Miguel, and then last Boss Rex.
Okay, thank you. So again, for all our investors, your best ally is really time in any kinds of investment. So we see opportunities in crisis. So take advantage while the market is still inexpensive. So you may start investing or adding on your investments. Thank you.
Thank you, Jenna. Miguel?
A lot of emphasis has been given to trying to time when to put in your money. Is now the bottom, like I put it in October, January, Valentine's, do I put my marriage money in there, stuff like that. But they take it from what Mr. C said, when what Rex Mendoza said. More important than timing the market is time in the market. How much time your money actually spends invested. So when's the time to invest? You invest now, whether you do it in a lump, whether you do peso cost averaging. The point is you need to start investing already so your money can start working for you. Thank you very much.
Thank you. Thank you, Miguel. Boss?
For me, I think everything's been said. So my real last message is thank you. Thank you to everyone who attended our forum. Really grateful for your presence. And again, also, very grateful to Philequity, to Jenna and Miguel for being here with us. Again, it shows the friendship, it shows the support. And I know with them and together with them, we are in the best position to handhold all of our clients, all of our prospects, and make sure they are firmly on the pathway to achieving financial security and prosperity. Maraming salamat po. Thank you. So, this is a major factor at ito po, ang hatid nito, syempre, higher